Recently, I posted on Blossom Social about the dividend income that we've received, my wife and I have received in our portfolio from our shares of XEQT. XEQT is our largest holding for my wife and I, accounting for almost 91% of our total portfolio size. I did share how we've earned close to $1,100 in dividend income from those shares of XEQT. On that post, there were some questions for us. Folks bringing up a comment around that, is it safe to put that much amount of our funds into one single ETF, like suggesting that, yeah, you don't want to put all your eggs into one basket, which I tried to respond to that comment from Michael. But in this video, I wanted to elaborate on that. There were also some other feedback and questions of what is the difference between VEQT versus XEQT that I've selected, and perhaps why I've selected XEQT. Are there some key differences between the two, and why generally many investors talk about that they're very similar? So we're going to also cover that topic. Before I get into it though, I wanted to point out a quick disclaimer. Even though XEQT is our largest holding, which we have a total of over 16,300 shares in our accounts, one thing to keep in mind is that these holdings are in different type of brokerage account. Majority of our funds are in Wealthsimple, and that's where, I did share in the recent Blossom post the amount of dividend income we received. We do have, however, one single account separately with Questrade, and that's our Smith Maneuver portfolio. That's where we keep the funds that we actually can tap into through the equity of our home through a Smith Maneuver portfolio. For those of you who may not be as familiar with the Smith Maneuver, I have touched on that through several Blossom posts as well as videos on my channel Moementum Finance on YouTube. I do encourage you to check them out. If you are not as familiar with Blossom, Blossom is an app developed here in Canada that allows investors, Canadian investors, to actually interact with each other and also learn from each other's experiences. It's a wonderful community that has been around. Currently, we have over 50,000 Canadian investors on that app. If you'd like to join me and other fellow investors on Blossom app, be sure to refer to the link in the description of the video, as well as on my channel URLs. As you can see, for our Smith Maneuver portfolio, currently the overall size of this account is hovering around close to that $108,000, and we have 4,173 shares of XEQT in this account. This is the amount of shares that for which we have not yet received the dividend income in Questrade. It has not been deposited yet. As a result, it's not reflected in the post that I had on Blossom. I just want to kind of point it out for you at this point. Now, when it comes to the amount that we have invested here, there's some elements of leverage investing through a Smith Maneuver, tapping into the equity of our home, and that is currently sitting at around $42,000 borrowed, which is incorporated in this amount here. For that $42,000 that we've borrowed through our home equity line of equity from Scotiabank, we are paying close to just shy of the 8% in terms of the interest rate. The positive thing with it though is that as the interest is accrued every single month for this amount borrowed, we are repurposing and reusing the HELOC to pay back that amount of interest. So, imagine the interest amount is accrued at the end of the month. We use the funds in our checking account to pay exactly the amount of interest, but we reborrow that same exact amount from our HELOC to pay back our checking account to the exact cents. This way, we are actually complying with the rules of CRA through the fact of that if the amount that you borrow to invest, the interest accrued on that is also tax deductible. The beauty of the Smith Maneuver in the long term is that it's helping us to turn a non-tax deductible kind of debt, which is from our mortgage, to a tax deductible debt through the power of borrowing it and then investing it in the stock market in this instance for us. I want to also point out for you that we have received some additional dividends in the months of September. These are for two of our holdings that are not XEQT. In fact, we have shares of VTI and VT. These are the ones that I'm holding in my own RSP account. And for that, you do notice that we received $42 and some cents from VTI, as well as $83 and some cents for our shares of VT. Now, moving on to the focus for the topic that we are focusing on in this video, and that's the major differences between VEQT as well as XEQT, XEQT and VEQT. One is offered by BlackRock, XEQT. The other one is offered by Vanguard, VEQT. What are some of the similarities? The key similarities between the two of them are that both of them provide you an easy opportunity to invest globally diversified in the stock market. So they could be the one-stop shop, one single solution for many investors. You don't have to buy any other single stock or ETF. Just by holding on to one of them, you get 100% exposure to the stock market. The focus being on 100%, meaning to say you don't get any exposure to bond market or fixed income. 100% is to equities, to stocks. The fee structure is somewhat similar. For XEQT, you are paying a fee of 0.20%. That's the overall MER that you pay for this XEQT. For VEQT, you pay a slightly higher fee at 0.24. So 0.20 versus 0.24. Not a huge difference, but if you're in favor of lower fee, XEQT might be a better kind of pick for you. When it comes to VEQT, you're getting about 44% exposure to the US stock market, whereas when it comes to XEQT, your exposure is a little bit higher at 46%. Now, how about exposure to Canada? With VEQT, you're getting exposure close to 30% to Canadian market. If you don't want to have too much exposure to Canadian market and stay away of that home bias, you might prefer XEQT because here the exposure is less at close to 24%. Now, when it comes to your exposure to international markets, excluding US and Canada, with VEQT, you have 19% exposure, whereas with XEQT, you have around 25% exposure to underlying holding of XEF. And lastly, as for your exposure to emerging markets, you have slightly higher for VEQT at 7%, whereas for XEQT is at around 5%. Now, when it comes to dividend distributions for XEQT, it is paid on a quarterly basis, and the yield is mostly hovering around that 2%. I know it's shown on the screen at 1.41%. The main reason is that for XEQT, the amount that they pay for dividend distributions kind of changes based on quarter. Typically for every other quarter, the amount goes up, down, and it reverts back and forth. But if you take the total amount for the past year and take it into account overall, you're going to see that it hovers around that 2% dividend distribution. For VEQT, on the other hand, they do pay their dividend distributions only on an annual basis, and it hovers around that 1.9 to 2% as well. Now, there have been some questions in the past around what are the sector exposures for these funds. I read on Blossom somebody was preferring VEQT because through VEQT they believe that they get higher exposure to technology sector, which is true. With VEQT you're getting 19% exposure to technology, but for XEQT it's not that far off. It's still you're getting 17% exposure to the information technology. Financials is both for both of them are the highest exposure by sector, sitting at 19%. Industrials is also on the third spot. Both of them, for XEQT, you're seeing at 12%, and for VEQT at 13%. On the fourth spot, we have slightly different exposure. XEQT has healthcare and consumer discretionary as its top fourth and fifth exposure, each of them at 10%, whereas for VEQT, the fourth and fifth spot belongs to consumer discretionary and energy at 12% and 8% respectively. The rest of the exposure as well is showcased for you here. Lastly, just to quickly show you the dashboard that I have developed for my account. It's developed in Looker Studio. The total market value for our portfolio is sitting at $462,828 and down $16,793. So we are at a loss, but it's unrealized. We won't actually truly lose anything unless we sell, and that's not our plan. We're here for the long term. In fact, every day almost I've been buying more shares of XEQT gradually over time. The other thing I want to bring out to your attention is that 91% of our exposures is to XEQT. Then we have around 6% to VT and around 3% to VTI. We have a slight exposure to cash sitting in our brokerage account, though we have some side cash as our emergency fund, as well as some additional cash sitting outside of our brokerage account that we could deploy should we decide to. In terms of expected annual dividend income for this portfolio, currently is sitting at close to $8,900. The focus for this portfolio is not truly only on dividend. In fact, dividend is a nice side thing to have. We're more interested in the total return through a global diversified approach. And that's why XEQT, VT, and VTI are our main picks. The only three picks that my wife and we have. VT and VTI, I'm only holding it in my own personal RSP account. I have a USD premium Wealthsimple account, and that's why I prefer to hold on to those two type of holdings in my RSP account to avoid paying for the 15% withholding taxes on the US dividend income, as well as based on any other treaty agreement that Canada may have with other countries. And the XEQT is held pretty much in our other accounts, including our non-registered account as well as HFSA account, as well as for my wife's RSP account. I hope you found this video beneficial and hopefully provide you some insights into how we are investing in the stock market. As you see, majority of our buys are in XEQT. We are going to be redeploying our dividend income, recent dividend income, and buy more shares of XEQT. For the USD income, dividend income that I received, I'm going to be repurposing that and most likely buy more shares of VT. I would love to actually lower my exposure to Canadian markets. I have a target currently of 20%. Currently I'm sitting at 23%. That's why by buying more shares of VT, that allows me to lower that exposure, given that VT only has 3% exposure to Canada. Majority of the rest of it is to US, international, and emerging markets. So that would be my game plan for the upcoming week in the stock market. Let me know what are some of your plans for the week ahead in the stock market. What stocks or ETFs you are planning to buy. If you would like to follow my journey, be sure to subscribe to my channel on YouTube, as well as you can follow along and get to know about exactly what stocks or ETFs I'm buying exactly as they happen through Blossom app, as it has an app and dedicated tab related to trades. Thank you, and I hope to see you all next time.